Hi, this video is a little bit different from the others that I've posted on YouTube, but I hope that from sharing one of my experiences early in my trading career, that I'll be able to help you recognize maybe some of the mistakes you might be making, or perhaps see the same sort of moment that I saw of when to realize that I'm doing the wrong thing and how to move forward. I've called this video the day that I became a trader, but it's not about my first day as a trader. Um, so I need to recap a little bit before moving forward to this particular day. So we're in 1990. I am a few months out of high school. I deferred my university place. I've got a position. I'm on a Japanese investment bank on an equity warrant desk. And for those of you who don't know what warrants are, they're kind of like options on steroids, highly leveraged, highly geared. And in this particular time, they were call options because during the 80s, with the bull run of the Japanese Nikkei index, everyone wanted these highly geared call options on Japanese stocks. Now we're looking at early 1990. The Japanese market is falling, volatility is extremely high, and traders are getting smashed basically, particularly on my investment bank. So my investment bank makes some drastic decisions. They demote two of the traders to become assistants, and I was promoted above a number of other people, despite my lack of experience, to become a trader. I was given a trading book of basically the hardest warrants to trade. Now, as I say, I'm very inexperienced. I've been an assistant trader for only about a month. Prior to that, my job was purely a ticket writer. I was writing tickets for the trades on the desk. That is the most junior position. My knowledge and experience of trading is minimal. My knowledge of markets is minimal. And there's an added complexity here, and that's just I'm not just a position trader for my bank. My bank is a market making house. So I have to make markets, and I'm giving a book of 150 plus warrants, so over 150 warrants I have to make prices in. I'm making prices to other investment banks, and those banks included the usual names, Morgan Stanley, Goldman Sachs, Salomon Brothers at the time. So the big investment banks at the time were all involved, were all market makers. And I'm also giving prices to the clients of my bank, which might be pension funds, for example. So I also have to learn how to become a market maker. Now, the first few months, I'm like every trader. I believe other people have got the answers. I'm looking up to people that seem knowledgeable. And the first people that I really saw were the technical analysts in the bank. Being a Japanese investment bank, we had experts, in inverted commas, on candlesticks and chart patterns. Very popular within the bank and amongst the clients. So I listen to these people, I put trades on based on what they tell me, and I had the erratic P&L that pretty much everybody who uses technical analysis would understand. And I quickly became aware that this is not going to help me become a consistent, profitable trader. So I actually turned off that pretty quickly. Then you listen to other traders, and one particular story is actually it was one of the senior managers just moved to my department, very highly rated. He was in contact with a number of the big funds in Japan, and he one day gave me some assurances that a couple of stocks, a couple of warrants were going to do very well. I built up big positions in these warrants, and I got smashed. They went down. I lost a lot of money. I had to go and explain to my head of department, about this loss. I didn't blame this guy. I took the responsibility, and it's fair to say that was a close call for me. I probably was close to being having my trading book taken away. It was only a few months after I'd been given the book. There were a lot of concerns in the bank and on my desk about giving the trading book to me so young, and this supposedly to some people, was evidence that I wasn't good enough. But what it taught me was, you can't just go around listening to other people. I had to make my own decisions, but I wasn't sure how to. What I knew was I'd learned a couple of things. So firstly, I'd learned to cut losses quickly, and that was a huge help to me. So cutting losses quickly kept me in the game, and got me to be one of the top two traders reasonably quickly, actually. The other thing that I was good at was I was quite agile, quite quick around the markets. I could spot when something was happening in the markets, and I was quick to get in and out. And those two things helped me to become reasonable. But what I realized was I was still reacting. I was still following what the market was doing. I was looking at what the market price was and then I was following that market price around. I was just quick following it around, but I was still reactive, and I didn't like that. But I wasn't sure how to become more proactive. I wasn't sure, how I was going to improve. But I didn't like the way I was, and I wasn't consistent enough at that point. So we fast forward to this day, and it's a normal day to start with. I've come in now. I get into work at roughly 5:30 in the morning to 6 London time. The Japanese equity market will close around about 7 o'clock London time, and our market would open just after 8. In the hour in between the closing of the equity market and the opening of the warrant market, I had basically 2 jobs. Firstly, to price all the warrants. So I have 150 warrants I need to price up to get their opening prices for when the market opens. The second job, which is linked to that, is to do what we would call run-throughs. So we're trading a market back before the days of computers and screen trading, where no one knows what any of the other market makers are calling the prices. Okay, so I can't look at the screen and see what other banks are calling the price. I don't know. It's what we would call a blind market. So before the market opened, to try and keep the integrity of the market, to make sure we at least all started around about the same price, we would run through our prices with other market makers, so that when the market opened, we were all in a pretty much a similar agreement of where these prices of these warrants should open. So as I'm going through pricing my warrants, I come to the one that is my biggest headache. Out of the 150 plus, this one warrant causes me, more intraday losses than any other warrant I've got, and it's a warrant on a company called Toshoku. Toshoku was a Japanese trading company, a very volatile stock and an extremely volatile warrant. You could lose, 30, 40, 50,000 US dollars a day just intraday jobbing Toshoku as it moved around. And remember, this is 1990, 40, 50,000 US, a lot of money. And I got 150 warrants to price. So if you're having that kind of movement in a few of them, you can imagine that a bad day can be a very bad day. I hated this warrant. The market probably hated it. It looked like there was only a couple of players that really understood it. And I can tell you that it's fair to say that my predecessor in this book, who had been, taken off the book, I know on a number of occasions he was actually close to tears because of the way this thing moved around. It was incredible. It would drop 2 points, you would sell out, and then it would rally, and then it would fall, and you were just following around this. It was like almost like a ghost. You couldn't quite get your hands on it. Every time you thought you had it, it would go against you again. It was a horrible, horrible warrant to trade. So I come to Toshoku and to price it up, and the stock is down 12%. Not uncommon, really. Now, I closed the price of Toshoku warrant the night before at 19 bid 20.5 offer. So a 1.5 point spread, 19, 20.5. I look at it, and normally something down 12%, I would open that around about 16 bid, 16, 17.5, 16 bid, 17.5 offered, roughly around about that sort of level. This day I decided I was going to check out what happened to Toshoku stock in more detail. And again, we have to go back and remember this is 1990. In computer systems that look to intraday moves and that analyze stocks, not like today, they were very expensive. In my investment bank, we had one of those systems on the desk, and it belonged to one of the managers. As traders, we didn't get it. So most of the time, we didn't see what these stocks were doing. So on this day, I asked the manager to have a look at the trade history of Toshoku on that day, and what I saw was that for most of the day, Toshoku was down around about 2%. And then in the afternoon session in Tokyo, it basically was the bids were being hit, and it moved down 6%, down 10%, down 12%. And I made a decision that I didn't like that closing price. I didn't like the way it traded. I felt it probably should be a bit higher than that. So I was only going to call the warrant down 1 point, down to 18 bid, 19.5 offered. Now, I went to my first run through with a friend of mine, a good friend of mine at the time, from a bank called Barclays de Zoet, which now would be part of Barclays Capital. Now, he called the price in Toshoku to me in the run through, and he called me 16 bid, 17.5 offered, which is where I would have normally called it. Now, he had already done some run-throughs in the market, so he'd spoken to other market makers. I knew that, so he was aware of where the market was. I wasn't. This was my first run-through. Now, the easy thing for me to do, what I normally would have done was just to okay that price and go, yeah, that's fair enough. That's probably what I would have called it. that would have been an easy thing, and said, okay, my price is wrong, I'll mark it back down again. But I decided on this day that I was going to back myself. On this day, I decided, no, I can't keep making the market price into Shoku and running around like everybody else in the market. Today, I'm going to work out, can I work out what's going on with this thing? I've got to finally do that. So I decided I bought 100 lots, the maximum I could buy off him, at 17.5 on his offer. He told me I was wrong. He told me the market was quite weak into Shoku and was trading lower than that away. May or may not have been true. It didn't matter. But I was going to back my judgment today. That's what I decided. Line in the sand. I'm backing what I think. Second run through, another very experienced, good trader at a bank called Robert Fleming, now part of JP Morgan. And with him, I had to make the price. Now, again, a little lesson in market making. Having bought them at 17.5, I can't make my original price of 18, 19.5. Okay, the right price, I think, was the price that I made, which was 17 bid, 18.5 offered. And just as an aside to explain why that's right, with a 17, 18.5 price, if I get hit on my bid at 17, I'm buying them cheaper than I've already bought them. So I originally bought them at 17.5. If he sells them to me at 17, I'm averaging down a little bit. If he buys them for my offer at 18.5, I'm making a point profit, which is $5,000. So in this instance, making an 18 bid, if he sells them to me at 18, I'm buying them higher than I've already bought them. That's the wrong price. Plus the market, I'm hearing, is lower than me away out there. So 17, 18.5, I think, is the right price. But ultimately, he sells me 100 lots at 17 and tells me I'm too high. So I look at that and I think, okay then, he sells me 100 at 17, I'm now long 200. Now I've got a problem. The problem is I'm long 200 lots, which is a lot into Shoku. And if I'm wrong, I'm probably losing $30,000 to $50,000. Now I can't do any more run-throughs because I can't afford to buy anymore. I can't, where is the price? If I make 16, 17.5 and I get hit again on my 16 bid, I'm in big trouble. So I can't do any more run-throughs. I have to sit there. I've got 200 lots, and now really we're finding out, am I right or wrong? And it, looks at the moment like I'm wrong. So just after 8 o'clock, the market opens. All the lights on our telephone boards are flashing, and our traders and assistants on our desk pick up the phones, and every market maker, every client wants one price, and it's to Shoku. Where is it? With us. My assistant is already out there trying to find it for me. He's contacted another bank, and he comes back after about 2 minutes with the price. 20 bid, 21.5 offered. Quickly I can make the judgment, someone's been buying this warrant, and it looks like I've been vindicated. I make a lower price because obviously I just want to make sure that's not some sort of an odd discrepancy. So I made a price of 19 bid, 20.5 offered, so a little bit lower because I'm already long. So I'm happy to lose some, to sell some at 20.5, and I do. I lose 100 lots at 20.5. Someone buys 100 off me at 20.5. I make the next price 19.5 bid to 21 offered, and I lost another 100 at 21. So I bought these at an average of 17.25, and I've sold them at an average of 20.75. Okay, which is a profit of about $30,000 US. Talking to the other market makers once things have settled down, one of the big US banks, and it doesn't matter for this video which one it was, basically went around on the open and were buying off every market maker they could. And not just once, but they would buy on the first price, they would ask what the next price is and buy higher up and buy higher up again. They were taking market makers short 300 or 400 lots. And so the market makers were scrambling around trying to buy it back, and it drove it up, 4, 5, 6 points for some of them. Clearly the stock price, I think I was right, had been manipulated down to get people to call these warrants down to buy thousands of these warrants. I mean, it is a multi-million dollar trade, so it is in someone's interest to sell, some of the stock down to get this happening, whoever it is that wanted to do it. So, what did I learn on that day? Well, I learned on that day that, yes, if you go with what everybody in the market does, if you go with the herd, you will live and die with the herd. And most of the time, you will die with the herd. I learned that if I'm going to succeed as a trader, I need to make my decisions. And what I need to do is to find out whether or not I can do it. Make my decisions and find out, are those decisions good? Can I trade? I think a lot of traders are scared of finding that answer out, which is why they follow other people and they follow trading with the trend, they follow the herd, because You know, they want to go. They don't want to make their own decisions. But trading is all about making your own decisions. Don't be scared of finding out whether or not it's right. I needed to find out, can I do this or not? Because up to that point, I was a reasonable trader. On my desk, I'm in the top two. But I still don't think I'm trading that well. I'm not consistently profitable. This moment, and I can remember it as if it was yesterday. I can remember every moment of that sort of hour and a quarter. And I remember it because that really was a turning point for me. It was the day that I became a trader. From then onwards, I became far more proactive. I made my own prices, and when I teach market makers, whether they're professionals or bank traders or whether they're amateurs and I'm trying to teach a little bit of market making skill to, you know, one of the key points I say is make your price. What do you think it is? You need to find out whether you can make these judgments. And if you can't, then trading's not for you. I needed to find that out as well. Because if trading wasn't for me, in an investment bank environment, I'm going to get sacked and I'm going to get very stressed in the meantime whilst I'm losing money finding out that I can't trade. So I needed to find out, and I wasn't scared of it, of finding out that perhaps I was wrong. As it turns out, I found out that I could read it and that I should make my own decisions. And from then on I did, and my P&L improved dramatically. I became consistently profitable day in, day out. And I would say that within 6 months of that, on the trading book that I had, I would say, you know, and I don't want to appear arrogant here, that I was, you know, one of the better traders in my market. And I went from being a nothing to that. And I did it by being more proactive, by making my decisions, by not following what the market did, not following the herd. Sometimes I would trade against what the others did. And that turned out to be the right thing to do, okay? The other thing that I learned then, which, you know, I still believe today, and I've seen it in a number of markets, is not to trust the closing prices. And so many, particularly technical type indicators, are based on closing prices. I learned then, and I've seen this in pretty much every market I've traded, that the close is full of all sorts of nonsense. There's some people trying to manipulate things, some people are moving it here, moving it there. Others are people that have been losing money all day long and are using the close basically to cut their final amount. You know, and loss-making trades are often cut on the close. So really, you're following the losers, the people that have struggled during the day. They get out on the close because they weren't able to get out during the trading day. And I learned then again, I'd heard all these stories about closing prices, and there was another thing that I learned. Don't always trust the closing prices. When I saw closing prices that were, you know, any kind of move away of a reasonable percentage, I would check it out. And if I thought it wasn't, I didn't like it, if I thought it was a little bit suspect, I would trade against that. But certainly to base my decisions on the closing price, no, never. And I would never do that as a trader. I think that's completely wrong. In every market that I've traded in, and I've said this in articles and in my book, in every market I've traded, the best orders come in on the open, not on the close. So there is my lesson. I learned to be proactive. I learned to make my own judgments and to work out, to find out, can I do this? And I wasn't scared of the answer. As it turns out, it was good for me. But I really would say to all traders, try and make your own decisions. Be proactive. And yeah, look, I hope this has helped. I hope it's provided something for you. If you've got anything to say, please feel free to email me. Always happy to answer emails. And again, thanks for watching.